Okay, dear students, first of all, welcome in our taxation ACCA pre-scene mock March 2026 debrief. Let's start, and towards the end of the class, I'll give you a homework as well. Let's see. Question number 1, Section A, taxation. Select whether Breeze Limited and Gale Limited would be a part of group relief and or chargeable gains group with Zephyr Limited parent. Now listen carefully, students. In order to be a part of group relief, parents' direct holding has to be 75%. Plus on each level it has to be 75. And effective holding of the parent will have to be at least 75%. Only then two companies they can be a part of 75% group relief. Now let's talk about chargeable gain relief. Students, in order to be a part of 75% capital gain group, the direct holding of parent must be 75. At each level it has to be 75. Plus effective holding of parent must be more than 50%. Repeat. In order to be a part of 75% capital gain group, the direct holding of the parent must be 75%. At each level, from one company to another company, the holding must be 75. But effective holding of ultimate parent must be more than 50%. Now let's read. Zephyr Limited holds 80% ordinary share capital of Queer Limited. Okay. And 60% ordinary share capital of Gale Limited. Stop. Zephyr, I'm writing Z, holds 80% holding in Queer means just Q. And 60% ordinary shares of share capital of Gale. In G Limited, they are having 60%. Now listen, G cannot be a part of any group. Why? The direct holding is not at least 75%. Okay. QL Limited holds 85% ordinary share capital of Breeze. This Q holds 85% in Breeze. So Zephyr is having at least 75 or more holding in Qer. Qer is having 85, means at each level it has to be 75. Of course, it is more than 75 in Breeze. Now let us check. In order to be a 75% group relief member, the direct holding has to be 75 and effective holding has to be 75. At each level it has to be 75. And we are looking either Breeze is a member of group relief or not. If I calculate effective holding in Breeze, 85, let's take 80% of that. If it is coming 75, then Breeze will become a part of a group relief. If it is coming more than 50%, then Breeze will become a part of capital gain group relief. So let's see what students I'm getting 68%. At each level, the direct holding of parent is more than 75. At each level, it is more than 75 or 75. Effective holding of the ultimate parent is more than 50%. So Breeze is a part of 75% capital gain group. But Breeze is not a part of group relief. Gale is not a part of any group because the direct holding from Zephyr to Gale is less than 75%. So Gale, I hope it should be clear to everyone that Breeze is only a part of, excuse me, capital gain group, and Gale does not meet any, is not a part of any group because it's not meeting any condition. Okay. Next question. How much 97,000 trading loss could be set against Ethane's total income for the tax year 23-24? Student, read it again. How much of 97 out of 97 trading loss, how much we can set off against the tax year 23-24? Let's read. For the tax year 24-25, Ethan made a trading loss 97,000. Having employment income 12. For the tax year 23-24, he made a trading profit. The tax year 23-24, there's a trading profit 20,000. And employment income, he's also having an employment income 75. Okay. In the tax year 24-25, we are having a loss of 97,000. An examiner is asking how much we can set up against the total income of 23-24. Now listen and listen carefully. The total income is 95,000. Now listen to me carefully, students. When we set up, excuse me, when we set up the trading loss against the total income, then don't forget to apply the limit. There's a cap. Cap says you can maximum deduct the greater of 50,000 pound and 25% of ANI. Of course, it is 50,000 is here greater than 25% of adjusted net income. But that limit greater of 50,000 and 25% of adjusted net income does not apply on trading profit. Means that limit only applies on other income. In this question, the other income is employment income. We have employment income 75. Due to the limitation, we can maximum set of 50,000. And this again, the 50,000 limits technically, logically applies only on other income other than the trading profit. There's no restriction on trading profit. Due to restriction, we can deduct maximum 50 technically against this 75,000 employment income, and that restriction does not apply on trading profit, which means that the maximum loss which we can utilize, we can set off against the total income of previous tax year, it is 70,000. And don't forget the rule that logically the restriction greater of 50,000 and 25% of ANI applies on other income. Other income means other than trading profit. So the maximum loss which we can set off against the previous year total income is 70,000. Okay. What is the annual allowance charge? If you recall the rule of annual allowance charge, basically everyone is having an annual allowance limit, let's say 60,000 pound. If you contribute more than that, then you will be having an annual allowance charge. And we know that on annual allowance charge, you will be paying income tax, and applicable income tax rate will be from the non-saving income. And we apply income tax rates at the end of all other incomes. Plus, we know that the available limit is 60. Okay. The point is, if you have unused annual allowance limit, you can carry forward that unused annual allowance limit for 3 tax years. Utilize on FIFO basis. Now let's see what they're saying. What is annual allowance charge that will be added to Lucy's taxable income? Yes, annual allowance charge becomes your taxable income in the tax year 24-25. Let's see. Lucy made a gross personal pension contribution 85. For the tax year 24-25, her adjusted income for the year is 290. It is more than 260. Students, when your adjusted income is more than 260, then annual allowance limit of 60,000 will also reduce. She had no unused annual allowance brought forward. She does not have any brought forward unused annual allowance, which means that the current year annual allowance is 60,000, which will be reduced. Why it will be reduced? Because her adjusted income is more than 260. So 290 minus 260 of the formula into half. So logically adjusted income is more than 260. So 290 minus 260 will give us 30,000. Into 1 upon 2, I'll get the difference. We'll get 30. 1 upon 2 means 15,000. 1 upon 2 means 15. Just a minute. So logically, in the current year, available annual allowance limit is only 45. Lucy's available annual allowance limit is only 45,000. But how much Lucy has contributed? I think Lucy was so maybe more excited to contribute. Maybe Lucy was very worried about her retirement age. So I don't know what was the reason, but Lucy contributed 85,000 gross PPC. So gross personal pension contribution of Lucy is 85, which is far more than the available annual allowance limit. Annual allowance available to Lucy is only 45, and the good news is HMRC will tell the Lucy that you have contributed more than the available limit, and there's a good news for you, Lucy. The good news is your taxable income will increase by 40,000 and you will end up by paying more tax. Let us give you a gift. Wow, what a gift it is. So Lucy will have to pay tax, no choice. Lucy, why you did this? So basically, the annual allowance charge is 40,000, which will increase the taxable income of Lucy. Wow. Next time, I believe Lucy will not contribute at least more than available annual allowance limit. Okay, sure. What is the maximum late filing penalty that Carlo could be charged? Wow. Now, such kind of questions, they are my favorite questions. Why they are my favorite questions? Basically, I want to motivate you here by looking question like this. The question is, sir, where is the motivation? Let me tell you. If you see a question like this and I'm assuming that you have no idea, assuming how to answer. So it's very simple. Even you go for a fluke, there are 25% chances you will be correct. 75% chances you will be incorrect. Now listen to me carefully. If you have no idea at all, assuming that I believe you have an idea, but I'm saying even you don't have any idea, at least by looking the question like this, don't go into a panic state. Once students, excuse me, they start panicking, once a student they lose their confidence by looking how many marks this question will have, only 2 marks. So students they just lose the confidence, and then what happens if you lose the confidence? Then you make mistakes, you make multiple errors, many errors in the rest of the paper. Even though there's a great chance that rest of the paper you might be having a really good command, but where you went wrong? You went wrong only in one question, where you put yourself under pressure. So students always remember one point: the paper is 100 marks, you need just 50 to pass, which means that you can still make 50% mistake. Again, I'm not saying go there and make 50% mistakes. I'm just giving you an idea. Just doing one, two, maybe three multiple choice question wrong will not lead you towards a failure. You still have 85%, 90% paper where you can perform really good and get easily the passing marks. But some of the students, to be very honest, they just fail because of their own, I would say, psychological behavior. So it's a request: if you don't know something, don't go into a panic state. That's my message to all of my students, to all taxation students, in fact to all ACCA students. Now they're asking, what is the maximum late filing penalty that Carlo could be charged? Carlo submitted his self-tax return for the tax year 23-24 on 5th October. Wow. He should have submitted on 31st January 2025. Biggest mistake. Of course, he is late. So instead of submitting on 31st January 2025, he submitted here. If you count the time period, it is of course more than 6 months late, but less than 12 months. So logically, it falls that delay time period between you should have submitted and actually submitted, the delay time period is more than 6, less than 12 months, between 6 to 12. Okay. The tax due was 3,200. Number one, you should have submitted On 31st January 2025, his return. Instead of that, he submitted on 5th October 2025. It is more than 6 months late, less than 12. So it falls between 6 and 12 months. Okay. First of all, what is the name of this person? Carlo. According to HMRC, the first gift which HMRC will ask Carlo to pay, that is initial penalty. So Carlo, according to HMRC, the first gift, there are many gifts for you. The one of them is initial penalty of £100. Story does not end here. Another story is now daily penalty of £10 per day due to late you have to pay. But the good thing is, even though the Carlo was late more than 6 and less than 12 months, uh, daily penalty is £10 per day. The maximum HMRC, the maximum time which HMRC consider, there are 90 days. So here I would say HMRC is little lenient. Otherwise, Carlo is more than that late. Daily maximum penalties is $10 into 90, not more than 90. They are coming 900. Now, there's one more penalty, the tax gate penalty, because you did not submitted your return on time and the total tax due was how much? 3,200. So there's a tax gate penalty. Let me tax gate penalty. The rate of interest you can say is 3,200, but listen and listen carefully. If you tax gate penalty is tax due into 7.75%. Whatever comes, let me use the calculator. 3,200 and there's students, I'm getting 248, but even though we are getting less than that, but the minimum which you have to pay, your liability could be more than £300 tax gate penalty, but it cannot be less than £300. So logically, the total gift which Carlo will have to pay HMRC is £1,300. But to be very honest, majority of the student could have made mistake here. But making mistake and doing this question wrong is totally fine. But going into a state of panic, losing the confidence, and then making multiple mistakes in the remaining paper, that is not fine at all. Students, you people are studying a professional study. When you are a professional, when you are going for a professional qualification, there's a huge difference between professional qualification and academic qualification, which we study at the schools. Professional qualification is more demanding. So always remember one point, even you are making few errors, you can still pass the paper. But if you lose the confidence, then obviously there's a guarantee you cannot pass the paper. Do not lose the confidence. What will be the amount of each Validas payment on account for the tax year 24-25? What will be the amount of each? We know that payment on account is, we'll take 50% of the relevant amount, and relevant amount is basically your previous income tax liability, and I'll take class 4 NIC also. I will deduct if there's any payee. If there's any payee, there's one question I believe from the students. Okay, answer. Right now, let's see. Valid is a self-employed. His total tax liability for the tax year previous year is 23-24 was as follows. Income tax is 8750. Capital class 4 NIC is this. We do not pay CGT on account. See, capital gain tax cannot be a part of payment on account, which makes no sense at all. So previous year relevant amount is 8750 plus class 4 NIC. Let's take excuse me, 50% of that. 8750 plus 1920. Students, I'm getting 5,335, which I think students has also replied. Perfect. So here they've asked each. Okay. Now What is wage capital gain tax for the tax year 24-25? What is wage? I hope I'm not wrong in pronunciation. We had the following income and gains for the tax year 24-25. What they are asking: capital gain tax liability. Okay, employment income is 47,000. Chargeable gain on the disposal of painting is 8,500. Now, students, obviously, it's a very straightforward question, but some of the time we make errors in a very straightforward question also. Why? The reason is not that question we don't know the answer. The reason is previous question, not this one. Before that, if you look at this question, after this Carlo question, examiner has, to me, if you ask me, I'd say examiner has given you the two very easy questions. But whoever has lost the confidence and now attempting next question number 5 and 6, obviously will making the mistake. Employment income is a non-saving income, which is 47,500. We know that. First, we apply taxation rates on all other incomes, and at the end, we'll go for capital gain tax. But they're asking only CGT liability. Why I'm working on 47,000, I'll tell you. 12,570. I just need to know what was the taxable income out of this employment. 47,000 minus 12,570. Student, the taxable income is 34,430, which means that this much basic rate band is already utilized. We know when you are applying CGT rate on capital gains, if there's a limit left, there's a space left in the basic rate band, then I'll apply 10%. If there's no space in the basic rate band, then of course I'll apply 20%. Only in case of residential properties, we apply 18 and 24. Otherwise, it is 10 and 20. Basic rate band is 30. The limit of the basic rate band is 37,700. Out of that, 34,430 is utilized. How much limit is still left? 37,700. 34430. We still have 3230 in our basic rate band. Now let's see a capital gain. Students, capital gain is 8,500. Annual exempt amount is 3,000. Taxable gain. Students, the taxable gain is 5,500. Out of this 5,500, obviously 3270 falls in basic rate band. We apply 10%. The remaining falls in high rate band and we will apply 20%. 327 plus 2230, let's take 20% of that. I'm getting 446. Let's add both of them. Students, CGT liability, I'm getting 773 pounds. Wow. Students. So I believe just by asking one tough question, examiner has given you the two very easy questions. Just to, I think, balance out the paper. Okay, click the relevant boxes below to indicate that due date and amount for the first installment for Zeta Limited. 7 months period ended 31st July 2024. Click on the relevant boxes below to indicate the due date, and they're asking the amount and the first installment. Time period is 7 months. They have got accounting period of 7 months. If you recall, chargeable accounting period can be less than or equal to 12 months. Chargeable accounting period cannot be more than 12 months. Let's see. And it is categorically, they are saying first installments. If you recall, students, we pay corporation tax in installments only in case of large organization. So at least it should be clear from the requirement that we are heading towards a large company, because it is categorically mentioned first installment. Okay. Zeta has a corporation tax liability 7,28,000 for 7 months accounting period. Their accounting period is only 7 months long. Okay. 31st July 2024. Zeta Limited is a large company and has paid its corporation tax by installment for several years. I would say this was extremely necessary to mention here. Why? Because if it is the first year of your company to be a large company, if it is the first year of your company to be a large company, then you will not be paying tax, corporation tax in installment unless your corporation tax liability exceeds 10 million. So examiner has mentioned that it is not the first year to be a large company. From the several years, Zeta is a large company. Fine. Students, if you recall, we pay first installment. We pay first installment on 14th of 7 month from the start of accounting period. Repeat. We pay first installment on 14th of the 7th month from the start of accounting period. So obviously their 7-month period is ending on 31st July. So definitely it was started on 1st January 2024. And the first installment is due. We pay on 14th of 7th month from the start of your accounting period. So it's going to be 14th July. Kindly do not write anything. 14th July 2024. I would request students are writing something. It's a rule, please. It means don't write. Please remove this. Thank you. Could you remove this? Tatenda, can you remove this? Okay, now listen to me. Student, these are the rules. See, this is what actually in taxation, I always, please just focus on the paper, I would request. Tatenda, okay, leave it. No need to do anything, please. Now, student, listen to me carefully. Actually, if you recall the chapter of self-assessment, in case of large organization, the first installment we pay on 14th of 7th month from the start of accounting period. After that, we pay each installment with a gap of 3 months. So these are the things which should be on your fingertips. So the date is 14 July 2024. And let me tell you one more thing. Students, taxation is a paper which actually test your memory skill as well. So it needs memorization also. Okay, now installments, how will I calculate? Because it's not a 12 months accounting period, less than that, no issue at all. Corporation tax liability is 7,28,000. Then 3 upon n. N is your accounting period. Here your accounting period is, how long it is? 7 months. So n becomes 7. No. N becomes 7. It is not 30. Some of the students, I don't know why they're doing this. 7,28,000, 3 upon 7. Let me use the calculator. 3,28,000, 3 by 7. Oh. 7,28,000, 3 by 7. Students, I'm getting 3,12,000. So logically, the amount of the first installment is 312, and due date for payment is 14 July 2024. Okay. Let's go to the next question. From what date will Damian have to charge output VAT on his sales? I would request students, please do not use anything. Okay, student, read it again. From what date will Damian have to charge output VAT on his sales. Of course, we have to see your registration first. Without registration, you cannot charge output VAT. Damian started his business on 1st July 2023. His sales, excluding VAT, were 9,000 per month for the first 3 months. 9,000 into 3 gives us 27,000. Now listen, student. If I talk about historical test says if you have just started the business, then previous 12 months cumulative taxable, your cumulative turnover, taxable turnover is exceeding 90,000. Then you are required to go for compulsory registration, or it could be shorter than that. It's not necessary it has to be 12 months. If you have started the business, then previous 12 months or shorter period. Total taxable supplies if exceeds 90,000, then you have passed the compulsory historical test. Let's see. The first 3 months is 27. For the next 3 months, it is 10,000. I'm getting 30. Then we have got 11,500 per month after that. How much? 11,500. Now listen to me carefully. 27,000 plus 30. I'm getting 57. Of course, we are far behind than 90. Now 11,000 students, why you people are writing? Kindly, student, do not write anything, please. Of course, it is far more less than 57. 11,500. If I add 11,500 into that, of course, it will not become 90. If I just multiply this with 3, let's see what I'm getting. 11,500 multiplied by 3, I'm getting 34,500. Let me add both of them. I'm exceeding 90,000 limit. Students, here we are exceeding 90,000 limit. Now listen to me carefully. Let me just pause the video. Okay, now student, here we have met. Kindly do not write anything. Here actually, students, we have met the historical test. Once you have met the historical test, then you have to inform HMRC within the next 30 days. After meeting the historical test, you have to inform HMRC in the next 30 days. And after that 30-day period, day 1, which comes after that 30-day period, your business will be registered with the VAT authorities. In case of historical test, you need to inform in next 30 days once the test is passed, and your business will be registered on day 1 after that 30-day period. Now come to the question. Within 9 months, we have exceeded 90,000 limits. Business starts on 1st July 2023, and 9 months they are completed on 31st March 2024. So this is the date. On 31st March 2024, actually, we have fulfilled the historical test. Now, within next 30 days, means till 30th April, you need to inform HMRC, and your business will be registered from the first day after the 30-day period. You need to inform HMRC till 30th April 2024, and your business will be registered from the first day after the 30-day period. First day after the 30-day period. First day after the 30-day period. So the answer is 1st May 2024. The answer is 1st May 2024. Okay. Which of the following statements regarding Sayas, I believe I'm pronouncing right, Sayas UK residence status for the tax year 24-25 is correct? Okay. Saya was born in Qatar. Wow, wow, wow. She's married, does not have any children. Okay, fine. Saya is relocated to UK. From Qatar, she's coming to UK. Okay, surprise. In December 2024, and move in with her sister at her house in York. Okay. Sister house in York, that is in UK. Sayas has previously visited the UK for 95 days in each of the last three taxes. 95 days will not make you automatic UK resident. Obviously, you are automatic non-resident in the previous three tax years. Has never been UK resident. Okay. So, never been a UK resident. Fine. Which of the following statements regarding Sayas UK residency status for the tax year is correct? One of them is correct. Let's see. Sayas meets the automatic resident. No, 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 not at all. Not at all. Saya is a close family member. Actually, close family member means close family member. Oh, she's not married. Oh, she's not married. Something was missing. Okay, listen. Close family member means we are talking about spouse, we are talking about your children. Siblings, they do not fall in close family members. Saya was born in Qatar and she's not married and does not have any. Obviously, if she's not married, she will not have any children. That's common sense. Sayas has close family in the UK. That's incorrect. So that is, she does not have any close family member in the UK. Sayas meets the accommodation tie of residency status. The answer, yes. Saya meets the accommodation tie. She is in UK, moved to her sister, so means accommodation is available to her. Sayas meets the automatic non-UK residency test, but they are asking something else. Which of the following statements regarding Saya residency status? Automatic non-residence is not meeting here. Why? Because look at this. Accommodation test is met. Logically, the answer is C, Charlie. Okay, now let's see this. Identify who will provide Jules, if I'm not wrong again, with the form P11D. Just a minute. Okay, students. Identify who will provide Jules with the form P11D. Now, students, listen to me carefully. When your employer gives you benefits in kind, so basically, then you will be getting a P11D form, which will be issued on 6 July following the tax year. 6 July after the end of the tax year. Let's see. Jules resigned from her employment at Initial PLC on 31st August 2024 and started employment with Sequential Limited on 1st September 2024. Jules had a gross annual salary 40,000 at Initial PLC. Her gross annual salary with Sequential Limited was 45,000 and they provided a company car. So students, who has provided the company car benefit in kind? Sequential. So they will have to issue the form on 6 July following the end of the tax year. So it is 6 July. Mashallah, one of my students, they have made it 16. So Sequential, because Sequential is a limited, they have provided the benefit in kind. They have provided the benefit in kind. Just a minute. Okay, so let's deal with this question. What will be the chargeable gain arising from the disposal of antique tea set by Silla? Okay. On 15 July 2024, Silla sold an antique tea set for 8,700. Just on 15 June 2024, Celia sold an antique tea set for 8,700. The antique tea set had been inherited by Celia on the death of her grandmother in 2011 and was valued 4250 at that time. Now, what will be the chart? Now, look at this. The disposal value is more than 6,000 and the cost is less than 6. First, let us calculate normal gain or loss. Sale proceed minus the cost, 4250. Let me 8,700 minus 4250. I'm getting a chargeable gain 4450. We will compare this with sale proceed minus 6,000, 5 upon 3. Whichever comes lower, that will be your chargeable gain. Why we are applying this is a special rule of 6,000 on chattels, because you are selling it more than 6, you bought it for less than 6. 8,700 minus 6,000, 5 by 3. Students, I'm getting 4,500, whichever is lower. So obviously 4450 is lower. 4450 is lower. 4450 is lower. I hope it is clear to everyone. Student, look at this. What is the maximum residency nil rate band that can be claimed at the time of Jake and Emmy's death, respectively? What is the maximum residency nil rate band? Actually, residency nil rate band is available when in your death estate there's a main residence which is left for direct descendants. Direct descendants means children and grandchildren. Direct descendant means children and grandchildren. Okay. Amy's husband Jake died on 18th November 2014. On 18 November 2014, under his will, he left his entire estate to Emmy. Emmy died on 25th May 2024, left her entire estate, including her main residence, to her daughter Andrea. Now, listen to me carefully. Actually, when it comes to Emmy, Emmy's husband Jake died on 18 November 2014. Actually, Jake is not going to get any residence nil rate band. Why Jake is not going to get any residence nil rate band? Because residence nil rate band was introduced in the tax year 1718. Jake died before that. That is why Jake is not entitled to any residence nil rate band. But obviously, when it comes to Emmy, Emmy will be getting the nil rate on the death of Emmy. The nil rate residence nil rate band 1,75,000 of Emmys and 175 of Jake will be available. Logically, Jake's 175 was never utilized. So it's going to be 3,50,000. Option 1. So I think they should not have mentioned such an old date. So here, little bit, I would say, historical question that residence nil rate band was introduced in 1718 and Jake died before that. Okay, now. How much will Carrot Limited's corporation tax liability B for the 6 months period ended 31st December 2024. Carrot Limited acquired 20% shareholding in Dennett Limited on June 2024. Okay. For 6 months period ended 31st December 2024, Carrot Limited had taxable total profit 49,000, received 4,500 dividend from Dennett. Of course, the dividend which we are getting from Dennett is a non-associated company, number one. But can I say on 4,500 we will not be paying any corporation tax because dividend income within the corporation tax is exempt. But student, if you recall the format, this is the dividend income which is coming from non-associated companies. It will become a part of taxable total profit. We'll add it in order to find out augmented profit. Students, if you recall, we will include this to find out augmented profit. So basically, taxable total profit is 49,000. Dividend from non-associated companies 4,500. Logically, I'm having augmented profit. I'm having augmented profit 53,500. Okay, fine. Now they have given us the chargeable accounting period is 6 months. So we have to time apportion the lower limit and upper limit to see, number one, which to see either we'll be getting the margin relief or we are not going to get the margin relief. Student, if you recall the lower limit is 50,000. 6 by 12, I'm getting 25. Upper limit, students, upper limit is 2,50,000. 6 by 12, I'm getting 1,25,000. This is 20,000, 25,000. Can I say augmented profit actually falls between upper and lower limits, so the margin relief is available? Margin relief is available. Corporation tax 49,000 into 25%. Students, 49,000 into 25%, I'm getting 12,250. Less margin relief. Upper limit, which is 1,25,000, minus the augmented profit in the question, which is 53,500. Standard fraction, which is 3 upon 200. And this margin relief formula will also be given to you in exam. Okay, margin relief, students, 1,25,000 minus the augmented profit 3 upon 200 into taxable total profit upon augmented profit. So students, if you utilize the calculator, we are getting 982. Let me use the final answer as 12250 minus 982. Students, I am getting 11,268. So students, I'm getting 11,268. Let's see, do we have any options? Yes, we do have. Okay, fine. What amount of pre-registration input VAT will tax limited be able to receive in respect of inputs incurred prior to his registration on 1st January 2020? What amount of pre-registration input VAT will be tax limited be able to recover in respect of inputs incurred prior to its registration on 1st January 2025. Student, if you recall, in case of services, if you have taken any services for the business, an input tax paid in the prior to 6 months from the registration on services is recoverable. And when it comes to other assets, student, if you recall, in case of services, you have a 6 months time period. So before registration, in the previous 6 months, if you have taken any services for the business purposes, whatever input you have paid, it is recoverable. When it comes to assets, you have a time period of, for in case of services, you have a time period of 4 years. In case of assets, other than in case of assets, you have a time period of 4 years. Whatever input you have paid on assets which you bought 4 years prior to registration, if you are holding those assets at the time of registration, then you can recover the input back. Okay, so now let's see the data. Tax limited voluntary registration for VAT on January 2025. During the year ended 31st December 2024, Tax Limited paid input 230 monthly to an outsourced marketing team for their services. Tax Limited also paid input VAT 750 on office equipment. Purchase in Feb 2024. Okay. What amount of pre-registration input? Now let's see. Tax Limited also paid input VAT 750 on office equipment purchase on Feb 2024. 1820 input on plant and machinery item purchase in August 24. The office equipment was scrapped in November 2024. Now, should look at this. On office equipment, you paid on office equipment you paid 750. Okay, but that equipment was scrapped in November 2024 prior to registration. So obviously, on the day of registration, you are not holding that office equipment, so no recovery of input on of 750. But when it comes to services, 230 multiplied by 6, previous 6 months input which you have paid against the services for the business, you can recover that input, which is 1380. Office equipment is scrap sold before the registration, so you cannot recover any input VAT. But plant and machinery, you are still holding it, and the time period for asset we have 4 years. But the rule says if you have bought any assets before in the previous 4 years from the date of registration, you can recover the input VAT, provided that you are holding that asset on the day of registration, at the time of registration. So 1820 we can recover. So 1380 plus 1820, I'm getting 3200. Okay. Which of the following statement regarding the child benefit income tax charge for the tax year 24-25 is correct? Dean is employed as a senior finance manager for the tax year 24-25. He receives salary 75,000, which is more than 60,000. If you have received a child benefit and your adjusted net income is more than 60,000, then there will be a child benefit charge. Dean is a single parent, receives child benefit 2213 during the tax year. So obviously, child benefit charge will arise. 75,000 minus the adjusted net income, which is 60, divided by 200. This is the formula. Just multiply this with the child benefit which you have received, 2213. Whatever the answer comes, let's see. 75 minus 60,000 divided by 200 multiplied by 2213. I'm getting 15 divided by 200, 2213. And logically, whatever comes, that will be your percentage. I'm getting 75% is your child benefit charge percentage. Let me break this, otherwise you will just get confused. This is a 75 percentage, and the amount is 2213 into 75%. Students, I'm getting 1659.75. If you're not getting the exact answer out of the multiple choice question, then go for the nearest one. Dean will not have to pay. No, you will have to pay. Dean will have to pay child benefit, income tax charge. Yes. Can I say logically the answer is B? Okay. Now, students, kindly listen to me carefully. The announcement is very important. Number one, we have attempted Section A of pre-scene mock March 2026. Now, listen to me. All of my students, those they are watching, of course, the recording of this video, and those they are here right now, kindly do attempt the Section B and C of the pre-scene mock March 2026. Option 1, if you have any difficulties in any of the question, you can directly ask me on WhatsApp and admin will share the answer with you as well. Option 2, if you feel after attempting the section B and C both, if you feel within 1 or 2 days, don't take more than that, we don't have that much time. Within 1 or 2 days, if you feel that no sir, it's better we should have a live class on the, and so there's no harm, I'm going to keep a live class in which we'll be discussing section B as well as C. But before I conduct that class, I really want you guys at least attempt the remaining part of the pre-scene mock March 2026. But if you want me to conduct a live online class, I'm available, but you have to inform me maximum, I would say, by Saturday. Don't take more than that. So that is all about today's class, ACCA taxation pre-scene mock March 2026. And best of luck for the upcoming exams. I'm just pausing the video. If there is anything you can ask, if you want to